Okay, the other thing that I had happen this week, also a historical tie-in to the family here, David, is I got a call on Friday. No, I'm sorry, it was Saturday, yesterday, from a real estate agent that I worked with a year ago, and it was on a condo project where your grandmother lived, David, where Grandma Wickert lived. They're in New Berlin. Yep, and it was the same condo project, and we had no trouble getting it financed last year for a buyer. And so this real estate agent called me and said, I'm having trouble, and it sounds like it's with the same condo development because it's not making it through condo underwriting from the Fannie Mae and Freddie Mac perspective. And so we could do a whole segment on this. In fact, we probably should dust this topic off and really give it a full treatment because condos add a layer of complication. And we just have one right now I can speak to where we were having trouble getting information from the condo association. We finally gathered it all. And in this case, it's not going to go Fannie Mae, Freddie Mac because of this detail. Fannie Mae and Freddie Mac want to see that the condo association is socking away money every year for that next thing that's going to go wrong, whether it's the roof or the basement or what have you. That's called reserves. Mm-hmm. And in the particular case that we have trouble with right now, where it's not going to make it for Fannie Mae, the association decided we have enough in reserves. So we're not going to put any more away. And that is not cutting the mustard in terms of the Fannie Mae Freddie Mac rule book. So what we're going to do in this particular case, the only alternative we have is to say, well, what about a non-Fannie Freddie loan? And, of course, what does that mean, David? If it's not Fannie or Freddie, you're not going to get what kind of a loan?
You're not going to get a fixed-rate mortgage for 3 decades.
That's right. You are not going to get a 30-year fixed-rate mortgage if it's not going Fannie or Freddie. So what we're able to offer, Steve, in this case, is an adjustable rate mortgage. Now, we don't know if we're going to offer it yet because we took the same information. We have to collect a lot of information. Some other things that often kill a condo deal or can kill a condo deal are the levels and types of insurance coverage that cover the association. And, these are details that the typical seller and, I guess, real estate agent are blissfully unaware of. But we are going to make a concerted effort here at Accunet Mortgage to start educating every seller, listing agent, buyer's agent, and buyer up front in a more organized fashion. I'm announcing this to David as well. He doesn't know this. We're going to become the premier educators on condo financing for anybody that we touch because there are just so many details that the world doesn't appreciate that are required, not by Accunet Mortgage, but by Fannie Mae and Freddie Mac, the rule arbiters for all things fixed rate in America.
Can I also add
to
the condo piece? I got pulled in to this situation as well, and even one of the interesting pieces was we got a letter from the CPA for the condo association saying
that said they had enough money in reserves. I think we just lost David again, and that didn't cut the mustard, unfortunately.